Eric Muathe, Muathe.com, with part 1 of this weekend's market analysis for the US market for June 25th and June 26th, 2016. Take a look at markets here with about just under 2 hours before the close. Markets are down, let's call it about 3% for the major averages. The VIX is up about 36%. We see that crude oil is down 4%. And gold is up about 4.5. Let's take a look at the charts. Let's begin with the Nasdaq here. What we see here is a huge drop on Friday, consistent with what we see whenever markets move below 50 on their daily RSI. So that is consistent across the globe on many of the daily charts. And even though markets are down worldwide, I'll show you why the markets have yet to break down. So yes, a huge down day on Friday, but I'll discuss why some of the charts are showing that potentially there could be a short-term bounce after this huge down day. It might not have to be on Monday. It could be around here the next couple of days. Don't be surprised if the market recovers or if the market remains sideways. So I think what I would say for now is more than likely sideways action would make more sense as opposed to a straight down market. Here on the Nasdaq Daily, one of the reasons why I believe the market has yet to break down is because the line we were watching for the Nasdaq continues to hold. So this simple RSI line has yet to be broken. So that's one reason why I think the market could still bounce. And the other line comes from the top side, previous RSI resistance. As we know, once the market moved above this line, we had a nice recovery off the lows of February. So we've been using that line for support since then. You can see that simple green line has been used before by the market during this support period when the market stopped going down here and recovered. Right now coming back to test the same level. So the thinking here is that as long as the market is above these two lines and showing support, we can still expect the market to move higher. Now, of course, if at some point we do break below those two lines, then that is when we can start expecting markets to be pointing down. Since we haven't seen the break, the likely scenario in my opinion for now is that the market surprises by bouncing here in the short term. If we take a look at the Dow weekly, so one thing we can see here for the Dow is really we are not surprised by the market struggling on the weekly time frame, because we've been seeing resistance or showing resistance on this RSI top side for the Dow for a couple of months. So we've been coming back here, and every time we hit that level, we see a market pullback. We saw the same thing here during the highs there, and also the same thing here late 2015 off the highs here on a weekly chart. So the weekly chart continues to still have a lot of work to do. If the market is to see higher prices, it needs at some point to eventually move above this line. So weekly charts continue to be, let's call it, showing a lot of topside resistance every time the market tries to move higher. In fact, right now we are seeing the market pushing and coming to the lows of the day, lows of the week. And one thing we can see here is that it could very easily suggest that the market might have to close with its weekly RSI below 50. Right now, with about, let's call it an hour and a half before the close, the market is getting closer to this threshold of 50 on the weekly, confirming a big down week. The last time we had a big down week is when the Dow moved below 50 during this period here at the beginning of 2016. So here we can see for the day, the market is very close to trading at the lows for the session. So right now, the Dow coming down about close to 560 as it probes the lows for the day. And of course, day to day, we have to wait and see whether this line is going to hold or not. You can see this line connects the lows of late summer 2015, early 2016, and market has bounced on this line before here and now coming back to test that line. And also for the Dow, just like the Nasdaq, we are coming back to test the recent RSI movement. So this RSI movement here, slight breakout right there, brought the market off the lows of this year. and so we've been watching that for support or break. So the market is coming back to test those two lines, as we discussed also for the Nasdaq. We've held here before for this bounce area, coming back to test that level. If that can hold day to day, then eventually we bounce, and again, if we break through that, then that's when we can truly see the market begin a huge slide. Now, if you take a look at the Dow Hourly, one of the reasons why I think hour to hour the market could actually bounce is because if you take the RSI lows for the Dow and draw a straight line, we're pretty much still testing this line. Also, we can see that this is where the market is making a slight lower low, but the RSI is showing a slight improvement as of right now. So if that can remain the case, then obviously those two lines suggest that here we can expect the market hour to hour to start coiling to the upside if it finds support on these two lines here. Also, I would like to point out, coming into Friday's trade, we had noticed that the market had rallied all the way to resistance after Thursday's nice gain. So if you take a look at the hourly chart for the Dow and draw a line from where the high recently was recorded here, which is this break on the RSI, we had seen that the market had come close to testing this level. So coming into Friday, in a way it does make sense why the market pulled back, because it had hit RSI resistance as we discussed late Thursday, and now we see this pullback. Take a look at the Dow Transports Hourly, and again here we see another potential evidence of where the market could find support. Keep in mind, this is a 6 months hourly for the Dow, and I'm using RSI setting of 26 on my hourly charts. Keep that in mind. And also we see here that the market is also coming back to test RSI support lines, connecting the lows on the RSI going back to February. So if this line can hold, that's good enough. Keep in mind that there was also another layer of potential support, which is off this movement. The market moved higher off the lows of February, and so we've been watching this line here for potential support. The market's been using this for support. You can see here for the lows there, we eventually did show support here for a slight move higher, support here for a move higher, here double bottom for these lows, the market coming back to test that level. Now keep in mind also, it is consistent with what we've seen in other markets, which is we are making lower lows in price with a slight potential improvement in the RSI. That type of positive divergence, in my opinion, that type of positive divergence where prices made fresh lows and the RSI did not make a fresh low, might suggest that going into the next week and the new week, let's be open to the idea that the market could actually bounce. Again, as far as Friday is concerned, we can see that the market is coming close to dropping below 50. It would only make sense that the market closes lower. And again, right now we are trading with the Dow down about 270. I would speculate that the market closes lower at the end of the day, lower than 270, because we can see here that the market needs to move its weekly RSI below 50, confirming that this is a huge down day. If the market closes below 50 for this week, there's a potential that the following week could be reversal, as the market would push back above 50, suggesting a strong recovery week for the market. Just keep that in mind. In other words, if we take this to be the 50 line in the market, if we close below it for this week and the following week, next week, have a reversal back above 50, expect a snapback rally. So let's watch for that. Otherwise, if we stay above 50 at the end of this week, we might suggest that we might see a follow-through week next week. Hope that makes sense. So moving below 50 is always gonna cause the market to drop substantially, and a bounce above 50 might suggest that the market might have a strong move to the upside. Because we are getting ever so close to moving below 50, my suggestion and speculation here is that the market closes much lower into the close, so the market can have a recording of below 50 into the end of this week. With the market at the lows of the session, S&P 500 down about 70 points, we are coming back to test the potential support level. So this is this level here that the market came off the lows right there, and so we are coming back to test that level. If the market can show stability and hold this green line, so if it can hold around here, one can expect the market to recover. Take a look at the hourly chart for the S&P 500. Here we are making fresh lows hour to hour, and yet we can see that the RSI is showing potential for support. So that could be a reason why hour to hour, why the market could find some reason to bounce. And again, we are at the lows of the day, which would be consistent with the RSI on the weekly closing below 50. Let's take a look at the VIX. And on the VIX daily, we can see that the level we were watching for potential breakout here was 20.97. So 20.97 is where the market needed to move above, and of course we were speculating that if the market was to break out on the VIX, or if the VIX was to break out above 20.97, that would be why the market would be pulling back. So we are seeing a breakout. The VIX needs to stay above 20.97, the recent daily closing high, for this to be a period where the market continues to see lower prices. So we can watch this level to gauge the weakness in the market. If the VIX fails to hold above that level, let's say the VIX moves back below 20.97, then the market is going to be giving us short-term buy signal. On the hourly, for the VIX to be consistent with the previous analysis in this video, I think the market is showing that this is where the VIX could stumble. So the VIX here showing an improvement in prices, higher highs in price. Take a look at the RSI. No real improvement. That negative divergence could set the stage for the VIX to struggle and for the market to start moving higher. Now keep in mind, this might play out as we begin the new week, so might take a couple of days to play out. Here we are seeing that the VIX on the hourly is coming back to test the recent break. This break in the VIX right here brought the VIX off this level and a shallow pullback. So I think what's going on is the market is coming back to test that break point. And I think if that break point does not hold, in other words, if the VIX shows resistance around this RSI level, hour to hour, expect the VIX to pull back. So I think given those two reasons, we got coming back to test the recent break and the RSI here, and also coming back and showing negative divergence. If you take all that together, it suggests that around here the VIX is seeing its highs short term, and that more than likely the VIX could pull back and the general market could start recovering off the lows. Again, right now we are seeing the VIX trading close to the highs of the day, trading at about 24.53 and the high at 26.24. So around here, it will not surprise me to see that the VIX starts pulling back. In fact, I think the high for the high should be around 24.5 right there. So around here, don't be surprised if the VIX starts pulling back and the general market starts recovering. And so we have good perspective. This is how the markets are trading right now. You can see close to the lows of the day. One very strong bearish argument against the market is the fact that we are seeing yet again on the monthly that the S&P 500 has failed to break out above the current all-time monthly closing high. That's a bearish development here. So 107 to 107.39 was the recent monthly closing high. The VIX yet again, or the S&P 500 yet again, is failing to hold above that after several attempts over the last year. All these have been failed attempts to break out on the monthly. All of these have failed. So month to month, S&P 500 not looking too hot. The only way the market gets on a strong run is if it can clear this resistance. So month to month, this market is too suspect. Day to day, market looks good. So again, month to month, huge question as to where the market wants to go. Week to week, it still remains bearish. So maybe over time, the market eventually rolls over. But I think short term, we are due for a bounce. I'll keep you guys posted. Be on the lookout for part 2, which is for subscribers. Eric Muadh, Muadh.com. As always, good luck, peace, and blessings. E-A-C-S. Yeah. And I leave you with your markets coming off the lows of. We shall see how markets close and how the new week trades. Peace. I am out. Woo!